Why risk what matters most? In this episode, we're going to talk about what's the best low-risk investment that you can put your money into. My name's Doug Andrew, and I've been a financial strategist for 46 years. I'm in my studio right now. I've been blessed to have a national radio show. Now I'm in my 12th year, and I love talking to people over the air, also with TV and video. So welcome. In this particular episode, I want to address what I teach a lot of people in my radio show productions and also on stage as I speak across America and actually the world. A lot of people ask me, Doug, what is the best low-risk investment? Helping people optimize their financial assets and minimize unnecessary taxes and empower their true, or what I call authentic wealth now, for this is my 47th year. I've noticed that a lot of people hit retirement and they're sort of shocked because of the amount of taxes they are going to be paying during their golden years, and they never saw that coming. It's sort of like they thought they were going to be in a lower tax bracket when they retired, and they're not. And actually, that's a good thing, because in reality, most people in lower tax brackets are because they didn't save very much money. And I don't want to be in a lower tax bracket because I didn't save very much money. But there's places where you can reposition money, and the sooner the better, to where you can have a tax-free income, which is far better than a tax-deferred income that now you have to pay tax on. So the best low-risk investments, my favorite vehicle, I've actually nicknamed the Laser Fund, and I'm going to share with you why I think it's the best low-risk investment, but it's tax-free. But we're going to talk about what I call the laser test. I've learned from the School of Hard Knocks. I've made lots of financial mistakes, and I don't want you to make the same mistakes I made, and that's why I've authored many books, 11 books thus far as the shooting of this video. But my goal now is to write a book every year the rest of my life, and I've discovered and found a formula that helps me to do that. I've always talked about how to measure a prudent investment in my various financial books. So my very first book was called Missed Fortune, because of the fortunes people miss out on when they simply don't know what they don't know. And in that book, I reveal in chapter 2 a story about how my wife and I, clear back in 1982, lost our beautiful 6,400 square foot home in a foreclosure proceedings because I thought my real estate equity, my home equity, was a prudent investment. Well, I found out that real estate, for example, does not pass the liquidity test. See, the number one key element I want with low-risk investments are places to put my money where I have liquidity. Now, what's liquidity? It's the ability to access your money when you need it with maybe an electronic funds transfer or a phone call. Real estate equity, if it's trapped in the property, is not liquid. You can't get to it unless you sell it or you go borrow on it, and so it didn't pass the liquidity test. There's a lot of other investments people put money into that do not score very high on a scale of 1 to 10, let's say, in the liquidity arena. In fact, I would say most only score maybe 2 or 3 or 4 or 5. And I'll come back and give some examples here in just a moment. The second test is safety. I'm not just talking about the safety of the institution. We want to put our money into institutions that do have safety. Maybe, people get lured into putting money into a bank because of FDIC, the insurance that makes it safe, but the returns are pretty pathetic there. But that's really number 2. I define safety as the ability to be able to make money and not lose principal. When I set aside serious cash, I don't want to jeopardize or lose the money, the principal that I put in there. And here's the most important key. Any year that I make money, I don't want to lose money in the future that I made in years past. But I discovered a lot of financial advisors don't know how to do that. And so your money is in the market, and sometimes you will have years where you make money for 2 or 3 years, but in one single year, like 2008, people lost what they had made the previous 4 years, and it took 4 or 5 more years just to get back to break even again. No, I don't want to lose the money I made in previous years. So I want safety of principal, and I want any gains to become newly protected principal. Now, the third key element is rate of return. Most people put that as number one. No, I would rather have liquidity, safety in that order, and then look for rate of return. Now, we all want the highest return with the lowest risk, don't we? And so I want a rate of return that's not pie in the sky, because usually if you try to chase after those get-rich-quick type schemes, you end up losing money. I have discovered in interviewing many multimillionaires and billionaires that an average return in the 6 to 7% range is pretty acceptable. But I prefer tax-free, because a tax-free return of 7% would be like earning 10% or more in a tax-deferred investment, like an IRA or 401k, or a tax-as-earned investment like money in a bank or a credit union or a normal mutual fund. If I'm going to earn 6, 7, 8% rates of return, I prefer them to be tax-free. Then I don't have to worry about earning 10, 11, and 12% and pay tax of a third to only net 8. I'd rather earn 9 and net 8 than have to earn 12 to net even 8 or 7 because of having to pay tax on the back end. So I want a rate of return that has at least equaled or surpassed the inflation rate at any given time. And so you want to link your returns to the things that inflate, and I educate people on that in other educational videos. But those are the key elements of a prudent investment: liquidity, safety, and predictable rates of return. And I prefer tax-free. That actually spells an acronym. See, LS, liquidity, safety, and RR, rate of return, laser. So I just sort of bring it together, LASER, and that's an acronym. I'm an acronym guy, if you get to know me. Liquid asset safely earning returns. So I'm going to show you a scorecard and why I wrote a book called The Laser Fund that actually can help you measure any place where you want to put money, any investment, real estate, stocks, mutual funds, whatever, bonds, based upon this laser test. So I created this test, or a scorecard, so to speak, and it's indicated in a book. My most recent book is called The Laser Fund. And you'll notice here on the front cover of the book, I have these 4 pillars which represent liquidity, safety, rate of return, and then tax benefits are sort of icing on the cake. Inside this book, I explain the scorecard. And so with that score, based on a scale of 1 to 10, I look at all kinds of different investments or places where people typically put money. A lot of Americans put money in the market, for example, in tax-deferred IRAs or 401ks. And as far as liquidity is concerned, it doesn't pass the liquidity test very well, especially if you touch the money before age 59 and a half, or there's a 10% penalty. If it's in the market, you may not want to take money out or touch it if you're on an upswing, but when you're on a down, the advisor goes, no, hang in there, hang in there, hang in there, and then people finally sell low. But the liquidity is not there sometimes, because if you tap into the money, you might trigger tax, you might trigger penalties by the IRS or by the institution. So liquidity is number one. A lot of investments don't pass liquidity. Now, my favorite vehicle I call the Laser Fund, which is actually a maximum funded tax advantaged life insurance contract. When you structure it correctly, it comes in with a score, I feel, of at least an 8 on liquidity. I can access my money anytime I need in an emergency, and I don't trigger a bunch of penalties by the IRS or even by the institution if you do it the smart way. The next pillar is safety. I love safety. A lot of investments, like in the market, are not really safe. They don't score very high. The Laser Fund I love because I would put that at a 9 on a scale of 1 to 10. Okay, I don't think there's anything that's just perfect, but that would be a 9. When we get to rate of return, I've earned rates of return historically that has beaten inflation. Now, if inflation is double digit, like the 1980s. I remember when inflation was 10%, I was earning 15.5%. So I've always earned a rate of return of about 5.5% or greater than the inflation rate at the time. And that's another strategy that I teach in other videos. But see, I like the Laser Fund because it scores up here between 6, 7, 8 on the rate of return, because most of my life I've earned about 8.2%. The last 25 years, by using 2 strategies, I've averaged about 10.07%. And so rate of return return is very good, and you're not trying to get rich quick. I mean, if you earn 10%, you'll double your money every 7.2 years. The final pillar would be the tax benefits. I love the laser fund because it's totally tax-free. It's not just tax deferred. You accumulate your money tax-free. You can access it and live on it tax-free. And when you die, it increases, it blossoms in value and transfers tax-free. Now, I know that's a lot to swallow, but if this is intriguing you, rousing curiosity, I would implore you to look into this. I wrote this book with my two sons, The Laser Fund, and it's actually two books in one. And I'm going to show you how you can get a free copy if you just pay nominal $5.95 shipping and handling. But The Laser Fund is comprised of about 200 pages that has 14 chapters that talk about the laws behind it, why it's a sacred cow. It's been around for over 100 years in the Internal Revenue Code. So if you like charts and graphs and all the detail, that's your book. If you learn more by stories, you're more right brain, you flip the book over and you read this one. This is about 100 pages, 12 chapters with 62 actual client stories of how the Laser Fund, because it scores usually up there around 33, 35, 36 out of a possible 40. Nothing else comes close. I would challenge any financial advisor to show me a place to put money that scores as high as the Laser Fund. I want you to understand why I'm so passionate about it. So you can go to the laserfund.com website, laserfund.com, and you can get a free copy of the book. I'll send it out to you. You just pay $5.95 shipping and handling, and you'll have opportunities to learn all about how you can score different places you put your serious cash, and why I prefer to put about 60% of my hard-earned money into the Laser Fund.